let's start with the Fed. We had that Wall Street Journal report. What are the 2- and 5-year yields telling us right now?
I think the 2- and 5-year yields are telling us that the market believes that rates are going to go up next year, because 2- and 5-year yields have pushed through the highs seen after the taper tantrum in May and June of 2013. So we don't expect much of a change in the language. We expect the considerable period to remain. So there might be a little bit of a negative dollar reaction initially, but I think the lasting reaction should focus on what's happening in the 2- to 5-year area. If they push higher into the autumn, as we expect, there is an increasing risk of a bit of a risk-taking, profit-taking phase in equities, in credit, and a further boost to the dollar.
So you think markets overreacted a little bit to that Wall Street Journal report?
Yeah, I think the broader sort of thrust is going to be towards the Fed moving towards actually hiking in the summer of 15. So obviously there's going to be a lot of volatility in the next 1 or 2 days, but I think the underlying trend is clearly towards high US yields, which to us means a risk-off phase is coming potentially into November.
Okay. Interesting. Bank of England minutes, pretty much as expected. As expected. Employment numbers, a little bit better than expected. Sterling's getting a little bit of a lift on that. 6.3% is the rate. Now, if we get a yes in Scotland, what does that do for the rate outlook in the UK?
I think the broader view amongst market participants is that it probably delays the rate hike by 3 to 6 months. And then also people are feeling it may take longer before we actually get to 3% term rates. I think the first part is probably correct, because if you do see a yes vote, the divorce would be messy. It would impact UK business confidence initially, and I think that the bank would rightly push the first hike back towards the summer of 15. In terms of what the bank want to do ultimately, I think they still want to get to 3% by 2018.